On today's episode, we are going to take a look at 3 growth stocks that are down over 20% from their all-time highs and see if it's time to add. Like always, we're going to try to understand what they do, how they make money, and some of their fundamentals. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up. So let's get started. But before we begin, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Alright, so the first company we're going to take a look at is Spotify, the music streaming platform. The way they collect most of their money is through premium membership. So Spotify is traded under the New York Stock Exchange as ticker SPOT and is currently sitting at $287. From its all-time highs in the past year, the stock is down about 21.2% and it has a market cap of $54.7 billion. All right, so first let's take a look at some recent news from Spotify. First, they on February 26th of 2021, so a little bit less than 2 months ago, they did a senior note offering of $1.3 billion. That's a whole lot of money right there. And these offerings are not due until 2026. So even though it is going to increase their debt, is I want to say long-term debt that's not really going to affect. And I'm kind of interested to understand what this company is going to do with this money, especially since they already have a very strong balance sheet. The second thing I want to take a look at is just their most recent earnings. First thing is their total revenue was up about 17% compared to the same time last year. Their premium subscribers were up 24% and their total monthly active users were up 27%. So we're still seeing a form of growth from their overall users at the moment. Now, if we take a quick look at fundamentals, Spotify is expected to grow 15.1% on average for the next 3 to 5 years, so a decent growth stock for sure. Right now, they are not profitable in earnings. They're expected to break even in somewhere at the end of 2022, but they are positive in cash flow from operations, so that is a great thing. I'm more of a cash flow type of guy. If we take a look at their balance sheet looks great. So right now they have plenty of cash compared to no debt on their names, but with that new offering, they're going to have a lot more cash and they're going to be somewhat in debt as well. So right now, there's about 20 analysts looking at this company. 10 give it a buy, 8 give it a hold, and 2 give it a sell. That's actually pretty crazy how many holds are on the company right now. The average price is $344 for the next 12 months, and that's about a 17.3% increase from current prices. So analysts are a bit bullish on this company right now, so that's a great thing. And at the end of this episode, I'm going to share my thoughts of why I enjoy these companies and how I would rate them. The second company we're going to take a look at is Tattoo Chef. This is the plant-based food product, and you can find them in a lot of great stores right now. So Tattoo Chef is traded under the NASDAQ as ticker TTCF. It's currently sitting at $18.36, and from its all-time highs in the past year, the stock is down about 34.4% with a market cap of $1.49 billion. It's a super small company compared to Spotify, which was a nice beast already. If we take a look at some recent news from Tattoo Chef, and for those that are not familiar, most of their money is made from them selling their products. So Tattoo Chef is expanding their pizza offering with the launch of new plant-based pizzas. This was on April 12th, right? They are continuing to release new products, see what sell, see what don't, and kind of switch out. So it's a great move for them. So we can see Tattoo Chef is constantly producing new products to see what works. On March 10th, they also released some new products to some of their customers. If we take a look at their most recent earnings, which were their fourth quarter of 2020, for the full year of 2020, the company had about $148 million in revenue. This was 75% increase compared to the same time last year, so strong growth there. Their adjusted EBITDA was $9.6 million compared to $6.9 million a year ago. So they're seeing strong growth in revenues, and they're also seeing improvements in their EBITDA numbers. If we take a quick look at fundamentals, analysts believe this company will grow 33.3% on average for the next 3 to 5 years. This is, like I mentioned, a super high growth stock. Right now, there's not many analysts looking at the company to tell us what they expect their earnings to be in the future. But right now, historically, they've been positive in earnings. And if we take a look at their cash flow from operations, they've been positive minus this most recent quarter, trailing 12 months, it was negative, but they are expected to continue that positivity from cash flow from operations. If we take a look at their balance sheet, they have about $131 million in cash and a very, very low number in debt, about $2 million. So this balance sheet is pretty great, especially for a company that's profitable and also for a company that is positive in cash flow from operations. Right now, there are no analysts taking a look at TTCF, but it's such a small company, right? This is one that can definitely grow a nice amount and in my opinion can be acquired by probably some big player. All right, so the third company we are going to take a look at is CuriosityStream, and this is the streaming service for educational content. A lot of documentaries here. If we take a look at CuriosityStream, it is traded under the NASDAQ as ticker CURI. It's currently sitting at $13.32 from its past year high. The stock is down 41.8%, and it currently has a market cap of about $700 million. This is a super small cap in my opinion. There isn't any major news for CuriosityStream in the past few months. So this pretty much move is just the overall market and the overall growth stock getting beat down. And I do believe that's the same case for all these other stocks that we looked at. I don't think there has been any real negativity towards their overall business. It's more just a valuation and the way the overall market was doing. So for CuriosityStream, just gave us their fourth quarter on March 23rd. And for the full year of 2020, the revenue was $39.6 million. And that was up almost 100% compared to over 100% compared to the same time last year. Last year was 18 million. Net loss for this company is still $38.6 million, and their EBITDA loss is also similar values. For the full year of 2021, they also gave some guidance of $71 million, and this is an 80% increase compared to 2020, which already saw about 100% year-to-year revenue growth. So this is a nice hyper-growth stock. If we take a look, analysts believe this company will grow 36.8% on average for the next 3 to 5 years. Like I mentioned, it is not positive in earnings, and it is not positive in cash flow from operations, so something people should keep an eye on. If we take a look at their balance sheet looks great. They have plenty of cash right now, about $33 million compared to no debt to their name. Now, if we take a look at analysts, there are about 6 analysts covering CURI. 5 give it a buy, 1 give it a hold. Right now, the average price is about $20.67, and that's about a 55% increase compared to the same time to the stock price right now. So analysts are pretty bullish on CuriosityStream. Now let me share my overall thoughts. So first, if I was to put them all in my portfolio, this is how I would rank them. I think the number one and the biggest position would be Spotify. I do think the overall audio market is going to continue to grow, especially for me. I am a customer of Spotify and I can see how great their platform is. We're seeing an increase in monthly active users. We're seeing an increase of revenue. They are positive in cash flow from operations and with a very, very strong balance sheet. So even though it's not going to be a hyper growth stock, I do believe Spotify would probably, out of this 3, would make it the one higher in my list. So the second biggest in the portfolio would most likely be Tattoo Chef. And Tattoo Chef, the reason it would be over CuriosityStream is pretty much fundamental wise. Tattoo Chef has positive in earnings, it has positive in cash flow from operations, and it has a nice balance sheet, right? So because of that, I think it would be a lot less volatile than CuriosityStream. And we saw Tattoo Chef. All of these are growing their revenues at crazy levels. The third one and the smallest position would most likely be CuriosityStream. CuriosityStream is more of that speculative play for me, right? Right now, the company is not strong in earnings. It's not positive in cash flow from operations. It does have a nice balance sheet, and it is growing at some crazy levels, right? Almost over 100% last year, and it's expected to grow over 80% this year. So this is a hyper growth stock, but I do believe this is going to be a very, very volatile play. I do believe Tattoo Chef and CuriosityStream in the future could have some form of acquisition towards them, and that could be good or bad for investors. But those are the 3 stocks. Let me know on your list, how would you rate them on 1, 2, or 3, or would you not even touch any of them? So take care, guys. Have a good night, and see you next time.